Okay, so the S&P did a bottom sign last Friday, a hammer candlestick pattern, just above the support at 39.49. It seems the S&P wants to bounce, but the problem is that the trend is still bearish and there are many resistance levels the index has to break in order to trigger a decent bullish reaction. In this video, we'll see what are the most important key points to watch on the index from here. Let's start our technical analysis on the S&P index. Welcome to the Finance Hydra channel. My name is Nathan. Let's start our TA over here looking at the 1 hour chart. In the 1 hour chart, the trend is still bearish. The S&P could reverse this bearish bias. Yes, it could. However, it should trigger a decent, a real bullish reaction over here. And so far, there is no bullish reaction triggered in the 1 hour chart. We see the 39.49 support level in the 1 hour chart as well. We hit this support level and right now we are bouncing. It feels like we bounced it just to fill this gap over here. I'm gonna highlight it in this yellow area. We feel it, this gap, and right now we are losing strength again. If we trigger a proper reaction, okay, I think the S&P is going to bounce to higher levels. Right now, we should pay attention to its main resistance level over here, short-term speaking, which is the 40.15. The 40.15, this red line over here, did work as a resistance level two times on January, as a support level again in January, two times, and we did move erratically around this area this month, and right now, today, this red line is again working as a resistance level for us. So this key point over here is clearly a resistance level, and only if the S&P breaks this resistance level, I think we could actually bounce to higher levels. What's the problem with this bullish thesis? Well, the problem is that even if we break this red line over here, the trend would still be bearish because the S&P triggered a lower high, lower low in the daily chart. So as far as I know, we still could bounce to the 40.60 over here, this black line near the 21 exponential moving average, just to drop to lower price levels. The trend is still bearish and we have yet to see a very good, meaningful bullish reaction over here. All of the S&P is doing right now is a possible bounce to higher levels. But since there is no meaningful bullish structure, the S&P will just remain bearish. What could be a very good bullish structure in your opinion, Nathan? Well, first, we should, in the weekly chart, we should break the 40.50, closing above this point, doing a bullish candlestick pattern over here, because if the S&P is about to react, if the S&P is about to trigger a bullish reaction indicating that we could reverse this bearish sentiment, this midterm bearish sentiment, and seek higher levels in the weekly chart, maybe the 4,300 up here, we should do a very crystal clear bullish pattern in this area because this area is quite good. The timing couldn't be better because we see the resistance level at the 40.50. 40.15 over here, this red line. In addition, we are reacting just above, just after we hit this purple trend line over here. So this purple trend line did work as a resistance level for us 1, 2, 3, 4, 5 times in the past, and right now, if it works as a support level, that's totally fine, that's totally acceptable because this is the principle of polarity in technical analysis. Previous resistance levels are gonna work as future support levels and vice versa. So, okay, if the S&P reacts, the timing couldn't be better. Again, what's the problem? We don't see any meaningful bullish reaction. In the lack of bullish reaction, oh, and what if we actually see a bullish reaction over here in this area? Well, if we see a bullish reaction, the next technical target, in my humble opinion, I think we're gonna break the 40.60 over here. I think we're gonna break this dual resistance level on the S&P and we could seek the next resistance at 4,200 over here. And if we break the 4,200, only if we break the 4,200, we are gonna see a crystal clear bullish pivot point, again, another bullish pivot point indicating that yes, the S&P just resumed the bullish bias over here in the weekly chart. We indeed reversed this bear market seen since January 2022, and now we are ready to seek higher levels. Only if the S&P does that reaction, I believe we're going to materialize a bullish scenario. As long as we don't see this reaction, the S&P will just remain bearish. So where this bearish thesis could take us on the S&P? We'll see. First, remember to check my website, the link is in the description of this video. Public track record, options, strategies on SPY, on Tesla, daily analysis, check my website, the link is in the description of this video. Now, back to the S&P, well, if we resume this bearish bias over here and lose the support level at 39.49, mid-term speaking, the S&P is going to resume this bearish structure, all right? It found a resistance level over here at 40.15, and then the next technical target is 38.85, the next support level. Long-term speaking, in the weekly chart, the 38.85 was a previous bottom level over here. We can see in the weekly chart as well. However, the next meaningful target in the weekly chart, long-term speaking, is 37.73. That's the most important key point long-term speaking, because if the S&P loses this support level, it is going to trigger something that resembles a double top chart pattern. And this is going to be very, very problematic, because by triggering this double top chart pattern, the S&P is poised to seek the next support level, the next Fibonacci's retracement, which is the 61.8% Fibonacci's retracement over here around 3,200 in the monthly chart. This is the monthly chart, okay? So it is going to take a while. However, in order for this scenario to materialize, the S&P has to start losing its support levels over here. The 39.49 is the first one, so let's pay attention to this support level over here and to our key resistance level at 40.15. As long as the S&P remains inside this area, in my humble opinion, we're going to remain in a no man's land. So let's pay extra attention to these two lines for now. Of course, I'm going to keep you guys updated. And if you are still watching this video and you are not my subscriber, I invite you to subscribe this channel to keep in touch with my daily analysis, daily insights on the S&P, Tesla, Nvidia, NIO, and much more. Thank you very much for your audience, my dear friends. Stay safe. Farewell.